So in this session, we're going to focus on trade payables. So it's trade payables control as well as their reconciliation. Okay. My name is Thomas, and I have the pleasure of taking you through this discussion. All right. If you like to join our groups on Telegram, you can WhatsApp this number. If you also want to join our tutorial classes, this is the same number you're going to WhatsApp so that you get a link to our Telegram groups from which you can also look for assistance should you want that assistance. All right. So today we're going to focus on trade payables control account and the reconciliation of trade payables. And I would like to believe that at this level or at this stage, most of you are familiar with what trade payables is all about and what the trade payables control account is used for. So our trade payables is the same thing as our creditors. All right. Or sometimes they are referred to as accounts payable. All right. In other words, in our day-to-day activities, there are suppliers of services, of goods or services, whom we are supposed to pay, but we haven't paid them yet. So they are referred to as our creditors. Now, the distinguishing factor is that these are our service providers on a day-to-day basis. It's not like a loan that we get from a bank, because the bank is not providing us a loan every week or stuff like that. It's not part of our operations. All right. So trade payables or creditors or accounts payables is part of our day-to-day operations. And then some of the suppliers who provide us services, like those who provide us water and electricity, those who provide us goods that we sell, and so forth. And they might provide to us on credit, and then they become our trade payables. And then we need to remind you that when dealing with a trade payables, we have what we refer to as the trade payables control account. So the trade payables control account gives the totals, all right, the totals and the balance of trade payables. But we also have another, so the trade payables control in most cases, and we're going to say as if it is always the case. So the trade payables control will be in the general ledger, all right. And then we also have something else in the, what we refer to as the trade payables ledger, all right. So the trade payables ledger does not have the totals, but has the individual balances for each supplier, individual supplier account, all right. So there's an individual supplier account that you find in the trade payables ledger. Then you also have the trade payables control, which is in the general ledger. In other words, the amounts in the general ledger, or the accounts in the general ledger, are going to appear in the trial balance. But these in the trade payables ledger do not appear in the trial balance. Okay. So these individual supplier accounts, the trade payables ledger, will not form part of the general ledger, in the sense that the accounts in the general ledger are going to be disclosed in the trial balance, whereas the trade payables ledger accounts are not disclosed, right? So this is how we have our trade payables. All right. So let's say we buy from a supplier on credit. Then using the purchases journal, all right, we will have a portion for purchases, And remember that this portion for purchases, all right, applies if you are using the periodic inventory system. Okay, if we are using the perpetual inventory system, then we're going to debit inventory, all right, instead of purchases. So the purchases account is used under periodic inventory system, and the inventory account is used under the perpetual inventory system. And we say, for you to use the purchases journal, right, you should have bought goods for resale on credit. The purchases journal is not used for every credit purchase we make. It's only reserved when we make a purchase on credit for merchandise or for goods which we want to resell. If we buy on credit for something that we want to use, like if we buy office furniture to use, or if we buy a laptop to use in the company, if we buy on credit for use in the company, we will not use the purchases journal, but the general journal. So to use the purchases journal means we bought something for resale and we bought it on credit. So here are the entries. If we buy something for resale and we buy it on credit, remember, if we buy cash, we're going to use the cash payments journal, but only the purchases journal if we buy on credit and it is for resale. So we're going to make an entry here, and obviously VAT is going to be included at this level. They're going to include VAT. It's going to be there. And then the name of the supplier, as well as the trade payables control. This is the accounts that are going to be credited. And okay, so that's if we buy on goods for resale on credit. So if we buy on credit for use, all right, we're going to use the general journal. Let's say we buy office furniture for use, then we use the general journal because we buy on credit and it's not for resale. So let's say then we would have office furniture here, right? Then VAT input, then the name of the supplier as well as the trade payables control account are going to be credited. So as you can see, the trade payables control is going to record the movements in the balances of how much we owe to our suppliers. So in this particular session, we have an example by way of a question. And the question says that this is the story that we have. And then the question goes on to say, in the required section, we need to prepare the trade payables control and reconcile the balance to the list of creditors in the trade payables ledger. So I will explain the full story later on as to how the recording of a credit purchase does happen, so we can distinguish between trade payables control and the trade payables ledger. But I will explain as we go. So let us go through the information here, and as we go through the information, we will be highlighting those aspects which are particularly important when we go through our own examination. So this is for the month ending 30 November, right? And this is the information that is provided to us because we want to prepare the trade payables control. We're going to ignore any information that doesn't apply to the trade payables control directly. So this is the opening balance. And as you know, trade payables control is a liability. Liabilities have a credit balance. So if you want your balance brought down, if they say to you, construct the trade payables control, I mean, as a student, you could probably make mistakes, but here is something that will help you get free marks. Your balance brought down. It's as easy as given. And we're going to omit trade receivables control because we want the trade payables control account. Not so. Brilliant. So now let's go to this is the total list of debtors. All right. And this is the total list. So we ignore this. We need the total list of creditors. Is 25481. Okay. Now, these are the totals for the month of November 2009. So we're going to go into the journals because remember, we post from the journals to the trade payables control. Right. Those amounts come from journal totals. So what are we looking for? So logically, if you want to think in terms of how a trade payables control account is constructed, we have a debit, we have a credit, right? So anything that increases our trade payables is going to be on this side. Anything that increases, anything that decreases what we owe is going to be recorded on the debit. Any transaction that increases what we owe is going to be recorded on the credit side, and any transaction that reduces what we owe is going to be recorded on the debit side. So you can think as a student in terms of what can increase what we owe, what can reduce what we owe to our suppliers. So I can try to suggest some of these. For example, if we buy on credit, right, then obviously that's going to increase what we owe. And what's going to decrease what we owe is if we pay. All right, so if we make a payment, it's going to decrease what we owe. Or if we retain some of the goods we bought, it's obviously going to decrease what we owe. Okay, so basically that's the concept. So when we go through the journals for the month of November 2009, we're basically looking for those transactions, right, that could have increased our trade payables control during the month of November, or that could have decreased our trade payables control. We are looking for those transactions which affected the trade payables control because we started with this opening balance. We're coming from the month of October, and we opened November with this balance. So now we need to know, how did the transactions for the month of November affect trade payables control? And what's the balance today at the end of November? So let's go through the journals. So the cash payments journal, this journal is used to record the payments that we make. All right. So did we make any payments to our trade payables? Yes, we are told here that we made payment to our trade payables. So when we make payment to trade payables, we have a column that we record that. So basically, it means we paid a total of 5980. This reduced what we owe. So I'm going to put this in the debit side. So as you know, the settlement discount received, right? And if we receive settlement discount, then it's gonna also have VAT output. So all this settlement discount received and VAT output are included in the trade payables column. If you've forgotten that, you can revisit the construction of the cash payments journal, which shows you that the total figure for trade payables column includes settlement discount received and VAT output. So these two amounts are already included in here. So I'm just going to put this amount only. So these are purchases which we bought on cash. All right. Because this is the column for cash purchases. So I'm not going to record that in the trade payables control. The VAT input as well is for these cash purchases. So I'm going to leave them out. Right. So that's what I'm going to do. Then in my cash receipts journal, I want to think in terms of If I receive cash, all right, how does that affect the trade payables control? If I receive cash, how does that affect the people we owe? Obviously, in no way, because we're receiving cash. That doesn't affect the balance of how much we owe people. It only affects the balance of how much people owe us, the trade receivables control. But because we are dealing with the trade payables control, I'm going to omit this for tomorrow when I want to do the trade payables, the trade receivables. And I want to think in terms of the sales journal. Does it affect the sales journal? Does it affect how much I owe people? Definitely not. So this also is out, right? So you need to be able to pick information. So the sales, so is the sales returns journal, because it's about us selling. We need when we buy. And remember, now we come to the purchases journal, is when we buy on credit. So in the purchases journal, the trade payables column includes everything, VAT input as well. So this VAT input is already included in the trade payables column. So if you have forgotten the construction of the purchases journal, you can revisit All right, so I was saying that the trade payables column here includes the VAT input as well. So this purchases journal means is recording the transactions to say, for the month of November, the total I bought on credit is 10,560. So I'm going to put this on my credit because it increases what I owe. Then the purchases returns decreases what I owe, so I'm going to put 560 there. Then the general journal is used when we recording cash credit transactions, all right? When we bought something on credit, but it's not for resale, it's for use. Okay, so we are not going to look at credit losses because that applies to trade receivables control. Then the VAT on as well, the VAT on credit losses as well. And then we have another issue here of creditors with debit balances transferred to the trade receivables ledger. So I will explain this story here. So we have people we owe, right? And for some reason, they have debit balances. So what this means is that they have become debtors instead of creditors because they have debit balances. Perhaps they must refund us our money because maybe we paid and they haven't provided us with the service we need, and they're not going to be able to do that. All right. So, or for whatever reason, they have a debit balance instead of a credit balance. So instead of us owing them, they now owe us. That's why we transferred their balances to the trade receivables. So transferring to the trade receivables means we're going to credit the trade payables control and debit the trade receivables control. So this is going to be an entry in the credit side of the trade payables control. So this amount, I'm going to put it there, and my description is trade receivables control. Right, then additional information. So before we go to additional information, this is where I want to highlight that concept which I said I will highlight for you. So when we record, let's say we are recording in the purchases journal, all right? We record daily transactions, daily transactions, daily transactions. And then at the end of the month, we total, all right? Maybe this was the trade payables column, this was the VAT input, and so forth. Then these totals, right, are what are transferred, or what is transferred to the trade payables control at the end of the month. We transfer the totals, right? So only the totals are transferred from the purchases journal, the trade payables control. But individual transactions of a particular supplier, each time we have a transaction with a supplier, we have to write it in the supplier's account on the same day, or let's say on the same day. We don't have to wait for the end of the month. So there are two entries that are being made. Individual entries are made daily, right, to the supplier's account. And the supplier's account is kept in the trade payables ledger. Then we have a monthly transfer of the totals to the trade payables control. So the totals in the trade payables control should agree with the totals in the trade payables ledger, because the only difference is to the trade payables ledger, to the individual supplier, we record the transaction on a daily basis. To the trade payables control, we only record the totals at month end, but otherwise they should balance. So that's why we have to do a reconciliation to say the totals we transfer to the trade payables control should be equal to the individual entries we were making in each supplier's account. So the total of all the suppliers should agree with the journal totals that were transferred to the trade payables control. So now let's go through the additional information. So this is what happened as they were going through the balances. So a debit note for 986, all right, was entered in the sales returns instead of the purchases returns. So what happened is we returned goods to S hat, not so. And this was entered in the purchase returns, in the sales returns. So which means we do not have that record affecting trade payables control. All right, so it should affect trade payables control. So we need to include this figure in the purchases returns journal. All right, so this is an error. Our purchase returns journal shows a lower figure. We have to say the figure that recorded in the purchases returns journal plus 986 is the new amount that we have to record. So if you want to, if you have been trying to construct your own trade payables control as we go, you remember that we had a balance. Remember, I did not put the dates here because this is obvious and we may not have sufficient space for everything. But the dates are not too difficult. So the balance brought down at the beginning is given. Now we come to the purchases returns and VAT input. That's how we record it. We don't just say purchases returns, because where there is VAT, it's purchases returns and VAT input. So this is the original figure given under trade payables control. Remember this FAC15, right? But now we have to add the 986, which was recorded in the sales returns instead of the purchases returns, right? So we have done the adjustment. Then we need to ask ourselves, what about the individual account? Was the correct entry made to the individual account? So we are told that it was posted to the account of S Hout instead of S Hat. So this supplier's account is not correct in the trade payables ledger. So we have to say, okay, we have to subtract this 986 in the individual supplier's account as well, not just in the trade payables control where we put totals. We also need to know the balance of S Hat's account. So we remember that when we do the reconciliation, we're going to subtract the 986. So when we do a reconciliation, we basically focus on those things that affect the supplier, the individual supplier's account, not the trade payables control. All right. So this we know we're going to subtract 986 from this individual guy's account. Then we have an invoice of 690 for goods purchased from B. Smith. It was forgotten from the purchases journal. We are not told that we didn't record it in B. Smith's account, all right? So we do not make that assumption. So in B. Smith's supplier account, this was recorded, but it is in the purchases journal, which we need the purchases journal because all the entries that are made in the purchases journal are going to be added up, or which we call casting, at the end of the month. So this figure is missing. So I want to include it in the purchases journal. So if I come to my purchases journal, it's here. I have to add that figure of 690. So it's 10,560 plus 690, which was omitted. So my purchases and VAT input is 10,560 plus 690. And the correct journal is the purchases journal. All right. And remember that we also had those trade receivables. Those, if I can take you back, where are they? They're here, where it says that we also had some creditors with the debit balances transferred. So we're always going to credit the trade payables, and the description is trade receivables control. The correct journal is the general journal, right? And remember that we also spoke of the cash payments journal. Do you remember that? And we said this 5980 includes the actual amount paid, which is recorded under bank, the settlement discount received, as well as the VAT output, which we got from the settlement discount received. So this is a payment that we made. So it's going to reduce what we owe. So we come here, the description says bank, settlement discount received, and VAT output, and it's the cash payments journal that were where it was recorded, and this is the amount. Now, after all these entries, the next thing is for us to do a balancing of the trade payables control. All right, and balancing should be a simple thing for you now. And all right, so the bigger side is the credit side. Then the balance carried down. This is the correct amount of trade payables that we have to include. When we include it in the statement of financial position, we're going to take this amount. So if you look at that amount which we got and compare it with what they have here. All right, so we have a 25733, but actually the individual list of balances gives us a total of 25481. Because there's a difference there, we have to do a reconciliation to try to figure out why is there a difference between those two amounts. So to do the reconciliation, we generally start with the list per creditors balance. So the balance per list of trade creditors is what we are given. All right. Then we come here. So we try to read into those things that are going to affect the list of balances. All right. So if you come here, we have the list of the total list of creditors balances was undercast by 450. So in undercasting means we were adding up the individual balances, right, of this creditor and that creditor and that creditor. So it was undercast, or we missed a 450. We have to include it. It was undercast. It's too little by 450. So that undercast has to be added. All right. So that undercasting, we have to add it to the total. All right. And we read another one, which says an invoice of 1799 was entered correctly in the purchases journal, but the account of the supplier, it was entered wrongly. So as you can see, this supplier's account is too much because we recorded 1997 instead of 1799. So there's an excess there of 1997, right? 1997 less 1799. So this account is in excess of 198, and we have to remove that 198. So this is an incorrect entry. All right, so that 198 should be removed. Then if we do those adjustments, then the balance that we have in the list of creditors is going to agree with the balance in the trade payables control, like that. Okay, so that's how we carry out our construction of the trade payables control and reconciliation of the trade payables to the list of creditors. Right, so by way of reminder, when we do a reconciliation, we're looking at those items which affect the individual, all right, suppliers. Okay. So if something is entered in the journals correctly, then it's not going to affect the if something is entered correctly in the journals, but then we make a mistake in the individual supplier account, then we need to include that transaction in the reconciliation. Okay, so we're gonna keep posting more information, and if you have questions, you are welcome to ask us. So that's our number there. If you want to join our free Telegram groups, you can specify the module you want. Right? If you want to join FAC1501 or FAC1502, you just choose the one you want. Then when you have joined on Telegram, you can request to join tutorials. That is, if you want to be taught and you want to join classes, you can inquire from our consultants. So we wish you the very best as you prepare for this. The most important thing is to understand the principle, the category of an account, whether it's an asset, equity, liability, income, or expense, and which side it increases, which side it decreases. Then you analyze the transactions to see if any of those transactions is going to increase or decrease your account. So you should be able to construct any account by doing such an analysis.